Hi, Epstein with the Morning Flash Update. This update is for Friday, and we're at the 13th of September, 2024, and the time about 8:20 a.m. Central Time. Another up day in most of the indices. Now, you do realize this market has made back a real chunk. I mean, a big chunk of what it lost last week. So, this is the Jekyll-Hyde market that September so often brings. I tried yesterday to explain that September is often a down month, very often. Go back and do your homework on it, but it's not necessarily a crash month. The crashes I've seen actually occurred in October, so things to think about, but I'm not saying it's going to happen because I expect the Fed that has its two-day FOMC meeting starting on Tuesday is going to set up and set you for a rate cut. Now, the size of the cut can go either which way. I am, and I want to make this clear, I'm in the camp that thinks 25 basis points, but the other side of my brain, I'm a Jekyll-Hyde too, said, boy, if the Fed wants to really get ahead of the curve, why not go 50 basis points? But if I got to be in a camp going in, I'm at the 25. I'd love to see the 50 for the reason I told you. Then they can say, well, we don't need another 50. If they go 25, they might have to come out with 50. And part of it is the message they're sending to the market. Do they want to say that they're still data dependent, or do they want to say maybe the word is forward thinking? And that is the cusp that you're at. You're still getting a little bit of a residual bid in the energy markets off of Hurricane Francine, but the damage that I'm seeing is not severe, and I expect full production is going to be back in place. Today's a key day in this market. If you see new lows made under these lows going into the last part of the day, be careful, because the market is flirting with losing the bearish embedded reading. If it gains it back, this was the bear market rally. Today's a crucial day in that market. Bonds and notes continue to lose yield. I think the story you're getting out of the grain market right now is pretty interesting. We had yields that came out in bushels per acre for corn larger than most trade estimates, yet corn is higher. So what the market is saying is they think the USDA's got it wrong. So now you start watching as we get into the latter part of September. Remember, we're at the 13th already. Farm yields. You're going to see what the farmers tell you coming off the combines. That's what you start watching to see. Is it going to be reduced, or was the USDA right? We're on board for this, I think, the second largest crop of all time in corn, and we are on board for the largest crop in beans. So right now, you can be saying, okay, the September report's important. If you're rallying off of it and you can hold the rally, it tells you the market's fighting to make what we'll call a harvest low. That doesn't mean it's the low, but it's a harvest low. We'll see if it fights that. In the dollar, you continue to crunch to the downside. Now, it is time to be coming out of the SEP and going into the December. I have my clientele rolling today. I told them that in my subscriber video this morning. For those of you that doubted my call in 2600, and there were a number of people that did, bingo. This opens up the door for another much higher number, much higher. I'm going to do a gold report, but I want to say something important. Each one of these rallies like this that has gone up has been met by a large pullback about a week afterwards. Be careful with this. Obviously, you're getting a big chunk of the rally in front of the Fed meeting. And I'm going to repeat. I think interest rates down. I think the dollar down, which I've been right on, and I went against so many of the analysts out there, is bullish the gold, and that's what's happening. As I look at the rest of the market, by the way, look at the Mexican peso. It has been on a tear to the upside as well. So we'll see where that goes. In terms of news today, the news flow is light. You've got import-export prices. The import price is down 0.3. They expected it down 0.2. Petroleum imports, heavy weight in this, down 3.2%. Export prices, we're not exporting inflation. We're exporting a form of deflation, and China's exporting a lot of deflation is in order to keep their trade. They're lowering and lowering and lowering prices. China today announced that they got a plan to raise the minimum age for retirement because the population is aging. They need more people to stay in there. University of Michigan consumer sentiment, and this is the prelim number, so it is a good number to keep your eye on. It gives you an idea what people think. I don't think it includes the debate from Trump-Harris. I think it was taken right before it. Boeing workers, they're gone. They went out on strike. The vote wasn't even close. It's 90 some odd % both for the strike, and then there's a second part. First, it's they reject or accept the plan. If they reject it, then there's a second vote that they have to go on right away, like 95%. So obviously, as much as the union representatives brought it to their members thinking that was the best they can get from Boeing, the message to Boeing is loud and clear. Number one in Boeing, you probably got to go out into the cash markets and raise more money. Number two, you're probably going to get hurt if this thing keeps going, all right? Average strikes there about 50 days. Number three, you've got to up the number. So a 25% pay increase, the pension part that you put on, the health care, you're going to have to increase a bit of everything to get a better package to them. I realize the new CEO's got his hands full. He inherited this. He tried his best, or his staff did, to get this done. He probably has to step in now and make things happen. Last, I want to remind one and all that if you use TradingView, be aware that you can get all my indicators in it. It is one of the sets that we allow. It's 6 indicators that I put in it, and you will see you get the swing lines. By the way, I've put this now into Thinkorswim too, but not for you yet. Moving averages, Bollinger Bands are in it. My version, it's a little bit different. I use a different time frame. Window envelopes, you get my numbers with your subscription. Certainly my slow stochastics are radically different than the one most people use. And I think you should have outside days listed on the chart, but you can turn any of this off. The pairs are there. You can make it work with our courses because they work out neat. Again, you can configure this any way you want, but I think you'll find it interesting. And it only takes up 2 slots. So how do you get this? Well, you go to our website, iraepstein.com. You go up to where it says Client Resources, or you can move up here. You'll see TradingView. That's where you sign up, and then we turn it on for you. Once we get it turned on, we'll tell you we've turned it on via emails. You log out, back in, and it's there for you. Go into your studies, and away you go. I'm Ira. You have yourself a great day. I will try to put out my updates tonight for the weekend for you. I will catch up on that. And remember, I'm trying to do a gold report today, and then maybe I'll do a special report on a couple of other things in the stock ETF arena. So I might do 2 reports today. You have yourself a good day.